What's up, guys, and welcome back to Clearly Crypto, the channel where we want to know more, grow more, and reap the benefits. This is the place where you get the news and knowledge of crypto. So if that's what you're into, make sure to get subscribed. I come out with daily videos for you guys to help you out in the crypto space. So make sure to get subscribed not only on my YouTube channel, but over on Twitter. I like to share plenty of interesting things that I find about the crypto space, as well as the things that I learned about trading and what I learned about reading charts. You'll see today that I actually, if you didn't see it this morning, CNBC had a whistleblower, a former Twitter security chief, that actually talked about the security flaws that Twitter has. I don't know if Elon Musk knew about this already, but I'm pretty sure he's going to be happy to be seeing this on there. Now, for today's video, I have tons of interesting news articles for you guys. I wanted to get caught up since yesterday. I did come out with a video explaining what ISO 20022 is, since it's coming in November. So if you don't know what that is, you don't know what's going to be happening to the banking system, definitely check out that video. It goes into detail on everything that's going to be happening. That way you have not only a timeline, but different tokens that you can look into so that you're ahead of the curve and can come out into the next bull market as a winner. So the first article that I have today is Australia's new government finally signals its crypto regulation stance. And I just wanted to bring up this because it showcases how Australia is trying to be one of the biggest crypto hubs out there. They're just trying to innovate as much as they can. With this article, it was mainly talking about how they're going to be getting their, where was it? Oh, they were talking about how they were getting their token mapping in order. And for those of you that don't know, token mapping is what they're going to have to do to make sure that everything is in line. You'll click into, let's see, it was one of these links up here. Sent an inquiry last year about token mapping. You click into here, which it talks about how important having this will be. Let's see. The statement noted that more than 1 million taxpayers have interacted with the crypto ecosystem since 2018, and yet regulation is still struggling to keep pace and adapt with crypto asset sector. Let's see here that it was talking about a sensible token mapping exercise exercise which helps regulators and policymakers understand the depth and activities they are looking to regulate and how the technology interfaces with the activities, with those activities should help regulation be fit for purpose and both support innovation and jobs in Australia while protecting consumers. So this is basically what I was talking about with the ISO, that they're wanting to get the regulations in there. We need harmonization of global regulation in order to get blockchain out into the public, in order to get all of these banks regulated to where they can offer crypto as an option. So now with the mapping, which this is a great article as well. This talks about how they're trying to start up DAOs over in their community, as well as trying to make sure to get everything regulated. I'll talk about that bottom part here in a moment, but this talks about token mapping, which a token mapping exercise aimed at appropriately characterizing different crypto assets and determining if they are considered financial products that require some crypto exchanges to register for an Australian financial services license is also proposed. So they're just trying to make sure that with these tokens, that once they get them all up and running, they're not going to have any issues like, say, Ripple is having with the SEC, that later on down the line, the government can't turn around and say, hey, you guys did something wrong. They're trying to make sure to get all that done to begin with. So this other portion here, this kind of scared me with how they talk about the travel rule. I didn't know exactly what it was, so I wanted to look a little bit more into it. So basically, the travel rule is to where you must obtain and hold know your customer, so KYC information for both the sender and receiver. So what this is it's aimed at ordering institutions and exchanges that are going to be in Australia. If this were to take an effect, which they're even talking about, waiting for the U.S. to lead on this issue, because the U.S. is great at stopping anything crypto these days. But this is something that's going to cause those exchanges to have not only the person who owns the crypto to be KYC verified, the person that's going to be buying it, but whoever they send it to, they're expecting that person to be KYC verified as well, which is going to be kind of weird because with so many ways to send crypto, there's not as many ways to buy it as there is to send it off to like other wallets, other exchanges, other just to ledgers. I'm not sure exactly how they're going to make sure that all of this is done. It might just strictly go towards exchanges and marketplaces as far as this goes. So moving on from that, we have South Korea to impose 10 to 50% gift tax on crypto airdrops. So for those of you guys that love to get airdrops out there, you love to get that free money, this is something that I see not just stopping at South Korea. I can see this starting to be implemented all over the globe by different countries because, I mean, honestly, you do need to be taxed on something that you're getting. Like if you were to win a car on a television show, like if you were on The Price is Right, you are still going to have to pay sales taxes on that car, even though it was given to you for free. I feel the same way. It's a little weird seeing how they want to do 10 to 50% of it. So they either take 10% of it or they're going to take half of it from you, somewhere in between even. And then even down here, regulars will examine the airdrop on a case-by-case basis. So I wonder if this is a way for the South Korean government to kind of dip their toes into their community's wallet, see exactly what they're holding, and they'll be able to pick and choose which cryptos they take the 10 to 50% from. I wonder if the ones that aren't worth as much or they don't see as valuable, if those airdrops are going to be the ones that get hit less compared to the ones that they really want. They say that this is all going along with people not paying their taxes and stuff. They're saying that South Korea police agency is also experimenting with crypto seizures when fines have not been paid. So it's expected to collect 1 billion won in unpaid fines by the end of the year. So they're planning to get this in order. It's going to be pretty interesting to see how this develops, see how the people over in South Korea actually react to this, as well as to see how this spreads to other jurisdictions. So from there, I want to talk about this pretty cool collaboration right here. Interest Protocol partners with Chainlink Labs to bring more security to DeFi lending. So the bringing more security to DeFi lending definitely is the part that got me to read this article. What it's talking about is Interest Protocol, as you can see here, launched in June 2022. It's just a lending platform. It's for people to go on there, put up their crypto. They can get their stable coin. They have a stable coin, USDI, which is what they use to trade between this and USDC, which here's the website for you guys, just so that you can see exactly what it has on here. The website's pretty basic from what I've seen. Just clicking around into it, there's not too much to it. It still looks pretty new. From that article, you saw it just launched in June, so it is pretty new. But even with that, it's still pretty basic for me. Reading the white paper, you can just scroll down and the white paper is clickable right there. Reading the white paper did have me a little bit scared for this stablecoin. It talks about how it's going to be linked to USDC. It's going to have a pool of reserve trying to be over collateralized, and it's also going to borrow from other collateral. So this is collateral. I always say that, collateral. So this is basically saying that it's going to group in all of the crypto into one big pool, and then based on what it needs is what it's going to be taking out. I recommend you guys read through this quite a bit, especially if you're looking into this at all as far as going after the stablecoin, going after lending out of here, putting up collateral, anything else. Definitely read through this because they even have an option for the governance down at the bottom where they can do what's called a pauser. And if I go down here, let me see if I can find it real quick. An emergency pause. So with this last portion is the one that really scares me, because saying that any other critical scenario comparable to the above two cases in which pausing the protocol is the best interest of the protocol and its users. So irregardless of what these two things are, saying that any other critical scenario comparable to the above two cases, that's basically giving them the right to say, hey, this situation, no matter what it is, comparable to the top two, so we're looking at pausing it. And what this does is it not only pauses the deposit, it doesn't only pause the deposits, but it pauses their withdrawals, liquidations, borrowing, and repaying. And with this, the liquidations are actually pretty crazy as well, because with the liquidations, it doesn't liquidate your full amount. It's only going to be liquidating what you're under collateralized for. So it will liquidate up to that amount. So with that, what I was thinking is, well, what if somebody were to liquidate up to the amount to where they're evenly balanced out, and then crypto does another dip down to where they have to keep on selling it and take those steps down instead of liquidating all of it at that first liquidation level. Crypto continues to go down, making them liquidate on that stair step down. So that was one thing that I was thinking about along with it. And the other thing that they had about their liquidations, I'm not sure if I'd be able to find it in here too quick. I don't want the video to take too long. But it talks about how they're going to have other people buy the liquidity. So it's not just going to be them selling out their liquidity, but it's going to be other people on the marketplace or on this project being able to buy the they'll be able to buy the tokens at a discounted price is what I'm trying to say. So if they were to find an account that that is in risk of liquidation and the price seems right for them, they can buy those tokens from that person for themselves at a discount. So that's one thing that you guys could maybe look at for maybe some arbitration. Is it arbitration? Arbitrary? I forgot the word for it, where you buy at a lesser amount, sell at a higher, you play the markets. I know that you guys know exactly what I'm talking about with that, but that would be a good chance for that, where you guys could find tokens at a discount, take them out of this if you wanted to, and then go and sell them at a higher price somewhere else. So moving on from that, we have XRP rewards announced by Binance for users. So with this, Binance has what it's called the Learn Crypto, Earn Crypto program. So if you get onto Binance, whether you're in the US or anywhere else, it's going to be Binance.us for us, and then Binance.com for anybody else. Recently learned that you can't have it in Ontario. They've gotten pretty strict up there in Canada. But what this is doing is it's allowing people to learn about the coins that they have down here, one of them being XRP. And if you were to take the quiz, complete the quiz, then you actually get that as free crypto from them. So that is really cool to see. And they even have a staking option, which earns up to 1.4% APR in reward. So I know it's not that much, but heck, I mean, just leaving your XRP there and it gaining something is good in my eyes. So moving on from that, we have Near Protocol showing off quite a bit here. Near Protocol fake block was submitted during Weekend Rainbow Hat, and all this is talking about is how the Rainbow Bridge actually defended against somebody trying to do harm to it, trying to get in there and hack a bunch of people. And actually, the hacker is the one that got hit with this. You can see right here, which if you click into this, it goes through the whole thread. I do recommend you guys reading the thread if you do want to know more about this, because it was pretty cool learning exactly how this Rainbow Bridge did it pretty much by itself. It didn't even need any human intervention to get this done in order to get that nefarious player out of the bridge. But they had to pay a total of 5 ETH to even get into it to try to hack it, and it took the bridge within 31 seconds to get that taken care of. So that just shows how tough the Rainbow Bridge is. It's just pretty cool hearing about that, and I'm hoping that this type of resistance can leak into other bridges out there, can leak into other blockchains out there. That way we can have this kind of strength everywhere. So now this article was pretty cool. I like this one. Um, Facebook and Twitter will soon be obsolete thanks to blockchain technology. I have heard a few cases out there. I know Crypto Mason talks about a certain a former Twitter employee, I believe it was, that started a new type of Twitter, and he talks about it a lot. I hate myself for not knowing exactly what that was because I've looked at it a few times myself. Just haven't really dug too deep into it. I am following them on Twitter, which, no, I don't want to take too long looking that up. I don't want this video to be too long. If anything, I'll add it in a future video for you guys. You guys know I'm pretty good at remembering what I talked about in the past. That way I can bring it up in the future for you. So for this is basically talking about how Meta or Facebook, it's formerly known as Facebook, and Twitter are just becoming more centralized, how they're able to block people off their platforms, how they own all of your community. So you know all the followers that you have, they're making a ton of money off. Some of these places like YouTube and Facebook, like Facebook Reels, I believe it is. Yeah, they have Reels, right? Because I know that every month every single type of platform is trying to have its own thing now, but you can make money through their ad spend. So with this, this article is talking about the new social media that's coming out to us through decentralized means, through other blockchains. So with this talks about how they already have numerous live applications, including Lenster, Favor, Iris, and LensTube. So LensTube is pretty interesting to learn about because it's a decentralized YouTube. I'm going to have to take a look into that and see exactly what that is. I know that I have seen quite a bit of other social media platforms popping up. Like there's one called Be Real, where you basically it gives you have 24 hours in between each of your uploads, and it only gives you like 2 minutes to make a video for your upload. It's either a video or a picture, and then you're just kind of showing people what you're doing, and it's made to where you're not to where you have less chance of being fake. I would say you can't be fake is kind of a far-fetched idea there because you know you can get all ready for that 2 minutes if you're wanting to just sit by your phone and then make that video or picture perfect for it. But it's meant to kind of show people exactly what you're doing during the day so that people can connect. And as the app's called Be Real. So it was pretty cool learning about other social media applications being built out there by these blockchains to help out with the decentralization, to help with, like, say, our freedom of speech, because, you know, as far as Twitter is concerned, they have blocked people like Donald Trump and other users for saying whatever they want on there. Moving on from that, we have this really cool news. That is $1.61 trillion. That's $1,610,000,000,000, guys. Dollars investment manager launches new Metaverse fund. So these are some people that I'm definitely going to be keeping my eye on. It's Atlanta, Georgia-based investment management giant InvestCo. That's what their name is InvestCo. They have apparently been hitting it big lately because at the end of July, InvestCo boasts the $1.61 trillion of assets under management. So that's just recently that they've gotten up to that level. But they're talking about getting into the metaverse space, mainly talk about targeting. InvestCo is targeting our based. Oh, okay, I'm just reading that wrong. I was thinking that they make a typo there, but they're mainly targeting virtual worlds that are in the United States, Europe, and Asia. So I knew the United States wasn't Was pretty surprised to hear about Europe and Asia. I haven't heard too much stuff over in Europe, but that one's pretty obvious. Asia, a little bit less obvious for me. Don't know too much that's going over in that too much that's happening over in that marketplace. So that was definitely eye-opening for me to think of Asia as one of the big places to be looking at the virtual world sector or metaverses. But this talks about how InvestCo fund manager Tony Roberts says that he valued the metaverse sector at $1.65 trillion by 2030. So if you guys are looking to get into any tokens for the metaverse, I would definitely do so that and hold on to them. The HODL approach, it looks like it's definitely going to help out as far as the metaverse sector because he's expecting it to grow to that level by 2030. So in about 8 years, it should be a pretty big sector. I can see that, especially with that examples of the industries that are impacted down here that he brings up. Technologies include education, entertainment, healthcare, which is a huge one, logistics, another huge one, and sports. So one, two, three, four, five sectors here that I think are all really big sectors that the metaverse can definitely help out, make education definitely more fun, entertainment more real for people, healthcare a little bit easier to do from far distances. Logistics, can't think of off of the top of my head exactly what that can do, except maybe drive a 18-wheeler from home, or help provide a 3D view that they'll be able to make their trade runs on, figure out exactly how they want to send the product and shipments, everything like that. And then the sports sector, of course, would be like entertainment and education, make it more, immersed for everybody, make it easier for you to, say, train at home or something like that without having to have a huge field to do that with. So this was really a cool article, especially with not too much news about the metaverse happening these days. For them to come out say that they're definitely going to be going hard into the metaverse sector, and for the next 8 years is pretty pleasing to the eye to me. I'm glad that we're seeing a little bit of good news for the metaverse. So now the last two here. This one talks about BlockFi could be acquired by FTX for only 15 million. If you guys didn't know, BlockFi has a deal with FTX that if they get to certain parameters, that they can make quite a bit of money. But if they don't get to those parameters, as we can see here, they can be sold for pretty much peanuts. So instead of 240 million originally publicized, they can be bought for 15 million by FTX, which is, if that happens, I can see FTX becoming quite a big company, especially with them only having to pay that much for BlockFi. So with this, the only caveats that they have here is that they want BlockFi's client list to reach at least $10 billion by October 2023. They want them to commit, let me see here, they are also committed to pay an amount equal to 25% of BlockFi's annual operating income to a maximum of $100 million. Oh, and this was the big one. So this one, it is contingent on winning a regulatory clearance from the Securities and Exchange Commission, the SEC, for its yield product, BlockFi Yield, by December 31st, which would unlock $25 million FTX US. So with this one, I'm interested to learn a little bit more about that, how they could get regulatory clearance for their yield products before, things like Ripple gets their case done with the SEC as far as their XRP token is concerned. So it's going to be real interesting seeing what the SEC does as far as this, if they're even able to get that done by the December 31st timeline there. But honestly, I'm seeing, from what I'm seeing here, I can expect BlockFi to be sold off pretty cheap. Maybe not at that $15 million mark, but probably pretty close, probably at around 100 million, if not less. So the last article that I have for you guys, if you're looking to get into the crypto sector, if you're looking to make some money with it, if you're looking for what jobs you can do out here, This article talks about a big sector that you can get into. The crypto security and auditing firms are thriving during the bear market. So people need auditors. These blockchains need auditors. All these projects that are building on the blockchains, they need auditors to go out there and show people that they are safe projects. They need to go out here and make sure that there's nothing wrong with the programming, with the open source programming that they have out there. It talks about how they're getting paid 20% more than even Solidity focused developers. I've seen plenty of TikToks out there that talks about how great it is to be paid as a Solidity developer. But this is an alternative to that. So if you're not too great at programming, you're more of a person that's better at reading into things, making sure that everything's in order, making sure that everything is going to be going according to plan, that there's no bugs or issues with the project or blockchain, then this could be something for you. Now, I myself, I don't know all that entails with auditors, so if any of that was incorrect, I'm sorry, and I would love for you to put that down at the bottom. But yeah, I just wanted to go ahead and get that in here to let you guys know that this is a job sector that you could be getting into. But that's it for today's video. Like I said at the beginning, make sure to get subscribed. That way you're not missing out on any content in the future. I come out with these videos daily. That way we can keep up with the crypto market together. But I love you guys, and I'll see you next time.